Welcome to Value Plus, the family office. Knowledge Plus for Wealth Plus presentation from our research desk. This week our hot topic is awaiting the right time. But let us see before that what happened in the financial markets last week. Government has increased FDI's limit in various sectors like telecom, insurance, etc. This will help in attracting more FDI investments in India, which can support to finance our current account deficit. RBI left its policy rates unchanged, projected slow GDP growth, that is, it cut the GDP growth forecast from 5.7% to 5.5% and raised the concerns about inflation. Cost of borrowings will remain high until there is a further revision in the policies. Returns from equity may also decrease. So as a result of all this, Sensex fell by 584.17 points, that is 2.96% negative, and closed to 19,164 at the end of the week. FIIs were the net buyers in the equity segment with the inflows of rupees 765.80 crores, while they stood as net sellers in the debt segment with a net outflow of rupees 715.10 crores. This chart shows the price performance of different asset classes last week. The US dollar appreciated by 3.48%, whereas the Sensex was the major loser with a downfall of 2.96%. Next week, the financial markets will be eyeing on the cement dispatch data, which is to be released in the next week. Now let us have a look on the details of our hot topic, which is awaiting the right time. Financial market. Last month, all the global financial markets faced uncertainty, which led to a higher volatility. In India also, returns fell across the board in equity, commodity, debt and currency. Now basically fundamentals of the companies are the main drivers of the stock prices. But today, risk that global markets are facing is liquidity. Liquidity is going to reduce, but when? That is a very good question. Global policy dynamics. The primary risk that asset markets are also facing is global policy changes. US will start tapering the bond buying program, which can influence the prices of the financial assets negatively. But again, when the tapering the bond buying program will start is again a question mark. Change in the domestic policy. In July, RBI came with a surprise change in the policies. RBI governor said that RBI will roll back its policy when there is a stability in the rupee. Now this statement has cleared the stance of RBI that the rollback will happen only when the rupee stabilizes. If you will see in the chart, the blue bar shows that the policy changes have taken place in 2000, 2008, 2011, and there is a short-term increase in the yields after there is a change. But in the long term, the yields decreases, which will have a positive impact on the debt markets, which can give positive returns and also reducing the cost of borrowing. But again, rupee stability, when will it happen? Nobody knows. So we can conclude that RBI's measures will hamper short-term growth, but of course it is beneficial in the long run. Fundamentals and growth of the global economy is showing positive signs as the recovery in the US and Europe economy has started. Thank you. Please share your valuable feedback on our email ID info@valueplusinv.com. Thank you once again.